Welcome. I'm your host, Henri Arslanian, and welcome to the Future of Money podcast. My goal with this podcast is very simple. It's to go deep in some of the biggest ideas, trends, and developments we are seeing in the field of crypto, and hopefully empower you with this information and then let you make your own decision on what their impact can be on the future of finance and money. To do this, I invite each week one of the leading figures of the global crypto community to have a one-on-one conversation amongst crypto aficionados and discuss some of these topics. Before introducing my guest today, I just want to thank you, the 500,000 of you who follow me every week on my various social media channels, from LinkedIn and Twitter to the various YouTube channels, really for the support for this podcast that has grown now only last couple of months to having many thousands of downloads per episodes. And there's people listening to this podcast now in over 100 countries. So a very, very big thank you for all your support in recent months. Now let's kick off the show. My guest today is Arthur Breitman, the co-founder of Tezos. One thing you may not know about Arthur is that he does not drink wine, beer, or coffee, and that is a rare feat for somebody who's originally from France. But Arthur, great to have you on the show today. Thanks for being with us today.
Yeah, that's why they kicked me out, and I wish I did. The taste, it's just so bitter. It tastes like sadness. And same thing with dark chocolate. I can't handle it. But thanks for having me.
I'd say there's a lot of people we've had on the show. It's the first time that I have somebody from France who doesn't like French wine or beer. But hey, we still love you, Arthur. It's great to have you on the show. Arthur, as you know, the podcast, the show today, is part of our deep dive series where we go really deep in some of the major crypto assets out there to really enable some of our listeners to understand more about certain asset, how is it different from others, and again, empower them with this knowledge to be able to have a better view of the ecosystem. So today, what I want to do, obviously, I want to talk about Tezos, the Tezos ecosystem, some of the things happening within the community and on the roadmap ahead. But before we dive into all this, I think it would be very interesting if you can share with the audience your personal background and how from, Arthur came to Tezos from that perspective.
Sure. So I was born and raised in France. I did scientific studies focusing on applied mathematics and computer science. I moved to New York in 2005. I studied at NYU financial mathematics. And then after that, I worked in the financial industry at Goldman Sachs and Morgan Stanley, primarily on, I started with statistical arbitrage and then moved to mostly market making and high frequency trading. So did this for a while. And then in 2016, I decided to have a bit of a career change and went into AI. And I took a role at Waymo as a research engineer. So Waymo is the branch of Alphabet that works on self-driving cars. So I worked for a while on the left turn, which is not that easy to make because they're incoming cars. And in parallel to all that, I got involved. I got involved interested in crypto, and of course with Tezos. So I started working on it, and it started out as a side project, as a small hobby, and then it grew and it grew and it grew, until it became so huge that I just couldn't ignore it.
And that's amazing. I mean, what was the catalyst for you to really look into Tezos at the time when you were still at working in the traditional financial sector?
Yeah, so cryptocurrency was at the intersection of a lot of my centers of interest. There's a political project around cryptocurrencies, which I subscribe to. I think it touches on a theory of money and banking, which again is one of my areas of interest, but also on cryptography, computer science, distributed system. So it was, I got nerd sniped basically by Bitcoin really early on. Caught the bug, got really interested. And then one of the topics that interested me was evolution. So I spoke to some early Bitcoiners and I said, look, Bitcoin is great, but what if better technology comes along? And the answer, which I thought was very satisfying, was, look, Bitcoin is not a technology, Bitcoin is a ledger. And if you have better technology, you can keep the same ledger and just upgrade the underlying technology. And I thought, oh yeah, that's great. That's a great point. And then I started thinking about how do you do this in practice and how does this work in theory? So in practice, the way that people were conceiving about upgrades was through hard forks, essentially. The same method that's been used in the open source community for forking projects. So yeah, you change your code base completely and then everyone agrees to run the same code base. But it raises interesting challenges when you start thinking about network effects and money. And I think it opens governance questions. And at the same time, I also saw a lot of innovation in the altcoin space. And the narrative in Bitcoin shifted from Bitcoin can learn and adapt and take all of these innovations in. And it shifted to some sort of sour grape over, hey, none of these innovations are valuable. None of this is good. None of this is interesting, including things, like privacy, for example, including things like smart contracts, including things like proof of stake, which and the three aspects I think are quite important and valuable. So that really led me to think through how do we have a network or cryptocurrency that has this resiliency so that it cannot be taken over just by some sort of social pressure to upgrade code, but at the same time has this possibility to evolve, and that was Tezos.
Very interesting. And obviously then with Tezos, you guys did one of the first large ICOs in 2017. And of course, the industry has moved a lot from 2017 to now. What do you think is the biggest change that you've seen from somebody who has issued tokens 4 years ago to now? If you were going to do an ICO today, would you do things a bit differently than they were in 2017?
Well, the first thing is I didn't do an ICO. Like at the time, I was working for Waymo. So this was a side project, but it was cool and it was picking up a lot of steam. And I wanted to have the to see the side of day. The same with the proof of stake network is that you cannot bootstrap like proof of work. In proof of work, you can have an empty Genesis block and then people just start mining, and that's how you get your initial distribution. With proof of stake, you need to have this varied user base for the security. So you need to have many people involved, but you can't start from a blank slate. And so the only way, the only credible way to do it is essentially through a fundraiser. And I thought okay, so the structure that what Ethereum did worked well. Maybe we can do the same thing. So I partnered with some people in Switzerland who created this foundation. They were going to raise money through it, and so that is what happened. Obviously, lots of lessons learned here. In general, I think what has changed is public perception. It used to be that people cared a lot about distribution. It was important to have this very wide user base and to have this very, very fair launch and have as many people involved and so on and so forth. So that used to be a big thing. And now you have some leading crypto projects which have maybe 4% of their tokens floating and everything else, being held by VCs who trade between each other at discounts, and no one cares. So I would say that has changed a lot, and you have to. I think you have to adapt to that, but that's not what what happened with Tezos. Tezos was very much in this old school line of thinking, saying hey, you can't have this giant. You can have most of the tokens held by a centralized entity. They have to be in as many people's hands as possible.
I think we'll talk about kind of the role of Tezos in the broader ecosystem. But actually, I would love to go focus more on the Tezos blockchain for a second. Let's start actually with the consensus mechanism, right? So obviously, Tezos uses it's a proof of stake. But could you share with our listeners a bit some of the features and the particularities of that staking network, especially with what you guys call the bakers and the endorsers, and how it works in practice, and how is it different from some of the other proof of stake chains that we have in the market?
Yeah, so Tezos is one of the first proof of stake blockchain, and it's the first one I think to have stashing of stake. It's the first really major one, and there was a lot of innovations in Tezos. A lot of them have been copied since, but the general idea is that you have bakers, and so the bakers have to put up bonds in order to create blocks. So you put out a bond, and if you try to create multiple blocks at the same height, you get slashed. So this is a solution to this nothing at stake attack, where people say, well, if you get slashed on one, if you do multiple blocks on multiple branches, it doesn't matter, but it does. So that was an approach. But the other angle, which is interesting, is look, not everyone is going to want to run a baker, but people do not want to be diluted. And so if you think through the equilibrium of what happens if you only let pure stakers do this, and then you just tell people okay, you have to be a staker to do it, a lot of people would just end up lending their coins to stakers, or worse, just put them on exchanges. So you need to find a balance between encouraging self-custody, but at the same time allowing people to participate in staking. And the balance that we found with Tezos was to have this concept of delegation. And unfortunately, because of the name delegation, people have sometimes said that Tezos is delegated proof of stake, but it's not. Delegated proof of stake is a very specific algorithm that has been used in EOS, BitShares, Steem, and a few others. This is not what it is. So essentially, to create a block, you need two things. One is you need your own bond that can be slashed, and two, you need to receive delegation from the rest of the network. You need people who say, like, I want to give my block creation rights to you. So those are the bakers, and the bakers do two things. One is that they create blocks, and the other one is that they endorse blocks. So when they see a block, they just send a small message on the network saying, hey, by the way, I saw a block. So one algorithm that came, proof of stake algorithm that came after the EMI algorithm for Tezos was Ouroboros. And if you look at Ouroboros, at least in the early versions, it has this idea of like, similar idea of slots and blocks and so on and so forth, but it can have this it can easily have long reorganizations. And what the endorsements get you is that they make it a lot easier to stop reorganizations, because in the happy path, right, in a path where the network is working, people are not attacking the network and so on and so forth, you are going to see, everyone's going to see the same block at the same time, is going to send endorsements. You're going to have tons of endorsements. If you try to attack it, you're not going to get those endorsements, and you're going to have a chain that is much, much slower. So it's a way to speed up how quickly you get probabilistic finality. You can think of the endorsement. It's almost like a traditional BFT algorithms, where you say, like, I want to have two sort of people, otherwise I'm going to completely stop. And here what you're saying instead is like, okay, people are going to signal that this was a block, and if we have a bunch of people who all say yes, I've seen the block, we can move on, the chain is going to move fast. If you don't have a lot of people that attest to the presence of the block, the chain is going to move slow. So that's the mechanism of EMI. And I haven't seen it replicated in a lot of I've seen a lot of ideas taken from it, but I think the idea of slowing down or speeding up the chain based on how many endorsements you're getting is interesting. The closest thing that exists to it is a thing called Streamlet, which is a more classical algorithm, but based on similar principles.
It's interesting what you're mentioning. I think you're right. There's often some confusion with the delegated proof of stake, like you said, EOS. I believe some of the Binance chains as well have that as well. But I think if we look at from what you're mentioning, there is still a difference with what I think a lot of our listeners will recognize as staking and basically baking from Tezos perspective, right? Do you believe some of the other proof of stake consensus mechanisms and the staking mechanisms that they're putting in place, I guess from your perspective, I presume you believe that the Tezos baking mechanism has some advantages on those as well, I presume, right?
Yeah, no, I think it does, and it's been quite popular and working very reliably. As for the name Baker, the little story here is that you don't want to call them miners because they're not mining, right? Mining is like you're digging and it's very, very laborious and so on and so forth. That's not what we're doing here. We're not searching for like a small nugget of gold in 2 tons of earth by hashing. So at the time, NXT was called forging.
Yeah.
You build your block in a forge. It's nice. The problem with forging is that you can also forge money. That's forgery, which is a bad thing. So I don't want to call it forging. But I like in forging the idea that you're creating something and it's like maybe vaguely cube shaped. So I was like, okay, so, like what else can we find? And the word baker came up. Like, okay, their baker is also, it has French roots.
That's amazing. It's how these things happen, right, from name-wise. Elizabeth, can you explain what our audience, obviously one of the big features of the Tezos blockchain is this kind of on-chain governance model, right, of the network, I think what you guys refer to as a self-amendment features of the blockchain. Can you share with our audience how does that work, and how is it different from other layer ones that our listeners may be familiar with?
Yeah, so Tezos is an embedded governance model, which means that if you want to change the protocol, if you want to upgrade the protocol, anyone can do it. Anyone can come in and code up a piece of change to the protocol. You make up a patch. You send a message to the chain saying, "I propose that we replace the protocol with that version," and then all the bakers are going to come in and vote. And it's a 5-phase vote. First, you have an approval voting period where if there happen to be multiple proposals at the same time, you need to basically pick one. So you can upvote as many as you want, but the one with the most upvotes is going to be selected for the next phase. Then you have a vote with a supermajority of 80%, so you need 80% to move on to the next phase. The next phase is just cool down, we wait. Then you have another vote. again, 80% supermajority is required. And then if that happens, you have another waiting phase where everyone can get ready for the change and the network auto upgrade. So you don't even need to change your node. The network is just going to grab the new code on the fly, compile it, and then hot swap it. It's entirely automated. So which I think is pretty cool. The difference with other networks is that we're the only ones to do it. There are other networks who have, governance, for example, in Ethereum is mostly based on hard forks. So essentially the idea is that, well, people are going to broadly agree that some new version of Ethereum would be better than others. And then at some point they'll announce, okay, so here's a new version, everyone install the new version. But that's a beauty contest, because if you disagree with that, it's still in your interest to go along with everyone, because if you don't, you might end up on a fork which no one else uses. And I think this is forking-based governance is very, very sensitive to psyops and to small tweaks. Like if you convince everyone that everyone is convinced, in some sense, it becomes reflective. There are on-chain governance models that exist in other cryptocurrencies. I haven't looked at them in a while. Dash had on-chain governance, but it was not really for upgrades. As far as I know, it was for an on-chain treasury. You have Decred, which has upgrades with governance. They use a signaling mechanism, so people in block mention what upgrades they want, and if they reach a threshold, essentially people have to upgrade their nodes. But it requires a manual step. It doesn't auto upgrade. I think Polkadot has an on-chain governance mechanism, so different ones have their own. But Tezos, I think, takes it the furthest in terms of being binding and being automated.
This episode is brought to you by Crypto.com, where you can buy Bitcoin and over 150 other cryptocurrencies with over 20 different fiat currencies. Get up to 8% cash back instantly using the Crypto.com Visa card, plus 100% rebates for your Netflix, Spotify, and Amazon Prime subscriptions. Check out the link in the podcast description to download the Crypto.com app and stake CRO to get $25 with the code Henry2022. A couple of things I want to talk with you as well, Arthur, today is, first of all, let's talk about the network. Like, where are you now? Let's say, can you share with our audience kind of the state of the network data-wise? Like, I know there's a lot of calls on some of the smart contracts that are being on network. Just to give us an idea of the size of the ecosystem right now, and then we'll talk more about some of the comparables with other layer ones and where it stands in the market.
Yeah, so the chain started in the main chain. There was a testnet for a very long time, but the main chain launched in June of 2018. And between June 2018 and I would say January of this year, there was some transactions, but there was not a whole lot of transaction, and there was very little smart contract calls. And then we went to something like maybe 50,000 smart contract calls a month to we're going to do over 6 million this month. And so we've had tremendous growth over the past year in the number of smart contract calls. So it's been going up quite a bit. We regularly do about 1/3 of the transaction volume. Number of transactions on the chain that Ethereum is doing. So we've had quite a bit of activity that's happened on chain, and that picked up a lot in the past year.
That's amazing. And obviously, one of the things that's been happening a lot is kind of from what I see from a Tezos ecosystem perspective, is this kind of big push now on NFTs. And we'll talk about some of the banking use cases in a second. But obviously, there's been a lot of activity with Tezos and NFTs. I mean, you've done partnerships recently with Red Bull, with McLaren. What are you seeing from an NFT perspective and Tezos? And you believe Tezos blockchain, when it comes to NFTs, it could be a very good competitor to Ethereum?
Yeah, I think we've had a lot. So a lot of that traction has come from NFTs. Yes, there's been some big sport brands as partners, but I would say a lot of the growth has been primarily grassroots and driven by artists who've adopted the chain. So we've had a ton of art on Tezos, on platforms like Higetnunk, on platforms like Object.com, or platforms like Calamint as well. So we've had quite a few really good art marketplaces pop up on Tezos. And part of what I think has driven a lot of interest is one, the proof of stake angle. A lot of artists are conscious about the cost, the energy cost of proof of work platform, and so for them it's been quite important to use a low energy, a chain that consumes a low amount of energy. That's been a very very big factor, and we saw a lot of backlash in the mainstream against NFT based on the energy consumption. And I think by communicating that, hey, you know what? Don't throw the baby with the bathwater. You can do NFTs without spending a ton of energy. I think we help get more artists involved. The other angle is a governance angle, and I think it's important because when you have collectibles, the time frame you have when you think of buying a collectible, a piece of art, or a piece of memorabilia is in decades, and that's why I think they haven't picked up all that much before on corporate databases, because the life of anything that has a website on the internet is very short. After a couple of years, all the links are dead, the data is not available. So you need to have a sense of longevity if you want to buy these things. And I think Tezos, and especially with this governance model, projects that longevity, and I think that has driven a lot of interest for it.
But I get the energy environment debate, and that's obviously a clear advantage you have about on Ethereum, at least in Ethereum 1.2 that we have today. But how do you when you're somebody's looking at launching an NFT, and obviously you're trying to convince them to come on the Tezos ecosystem, how do you try to convince them, or what are some of the arguments you give them compared to some of the other layer one solutions that are also using proof of stake, the Algorand, Avalanche, Solana, and others? I mean, how do you actually, what are the differences you would say for a content creator to come and use the Tezos ecosystem compared to others?
I would say, first of all, that we have the best artists on the Tezos ecosystem. We have amazing marketplaces. We have great integration, great momentum, a wonderful development community that's extremely active and that's extremely helpful to newcomers. So community, culture, the people who are already using the platform, I think those are very compelling arguments to draw people in.
And do you think that's an area where, let's say, if we look at the future of the NFT ecosystems, the community, the development, and those are verticals or assets that will be very, very important from that perspective, in your opinion?
Yeah, so I think, yes, we're going to see a bit of a shift from pure digital collectibles to, NFTs that can unlock experiences or other things. And, you've seen, for example, with the on Ethereum, the Bored Gas Club, for example, which has this community aspect, which is not just about buying an NFT. I think probably game is going to be one of the biggest drivers. So having NFTs which you can actually use in a video game, or I apologize for using the word, but in a metaverse, I really think there's going to be something there. But also, I think for connecting for brands to connect with their fans and to unlock experiences. So yes, I think that's going to be definitely attractive. So you buy an NFT, but if you combine, McLaren did it, for example. You had NFTs of a car, but then you could unlock a visit if you combine all the parts of the car, for instance.
Yeah. From a Tezos perspective, in addition to NFTs, obviously the gaming sector, I presume, is an area of focus, right, based on what you just mentioned?
Yeah, absolutely. And we had some great traction there. Obviously, Ubisoft started its Quartz project on the Tezos blockchain with Ubisoft NFTs. There were also NFTs in EVE Online on the Tezos blockchain. And there are a number of games which are currently building on the Tezos platform, ready to be released quite soon.
This episode is also brought to you by ACX. Do you work at a crypto company and looking at scaling your customer support function while reducing cost, or looking at improving your community management, or even looking at support for account opening, KYC checks, or client remediation? Well, ACX can help. ACX is the world's first specialized crypto customer support, compliance support, and community management outsource provider. ACX enables crypto platforms to offer 24/7 crypto specialized customer support and community management to their clients in multiple languages, including English, Russian, Turkish, Arabic, Spanish, and French, by leveraging dedicated staff that are 100% advanced crypto trained and multilingual. Find out more at acxinternational.com. Make sure to also check out their annual crypto customer support report, where they independently analyze the customer support levels of 30 crypto platforms globally. Now, back to the show.
And what about the financial sector? I mean, I've seen you from a Tezos perspective. You guys done some interesting proof of concepts with Société Générale and other financial institutions. Can you share about with our audience a bit more? What's the financial angle you guys are looking for, financial services use cases you're looking at with some of these institutions?
Yeah, so we've done a few things with Société Générale and other corporates and other finance and other traditional finance sectors. I think there's an interesting intersection. We've seen a lot of innovation, financial innovation in DeFi over the past year. Like products like perpetuals, for example, they are a creation of the crypto world. They really need financial primitives that did not exist really in traditional finance. So there's a ton of innovation, but right now most of that innovation has been circular. So what can you do with DeFi? You can you take your tokens and then you borrow against your tokens for another token, which you're going to stake in a pool that provides liquidity for a third token that is a governance token for a borrowing protocol. It's just like, it's completely circular. So unless DeFi can actually unlock real financial use cases, which are not all DeFi related, I don't think it's going to endure. But I think it can. And so, for example, one of the early focus was around STOs. So a security token offering where you take traditional equity or traditional bonds and then tokenize them and put them on a blockchain. So there's been real estate projects, there's been movie projects. You have STOs. Today, STOs are not that useful on the chain. They're useful for the issuer. So yeah, you have some benefits. It's easier to track your cap table. It's easier to make transfers. But I would say the benefits compared to a traditional approach is not where it could be. Once you start combining this with lending protocol, once you start combining this with automated market makers, then it gets a lot more interesting. And we've seen it, for example, with Société Générale. So they've done it. This one is done on Ethereum with MakerDAO, where they use a MakerDAO protocol to get a loan against traditional assets. So that type, I think, of approach is quite interesting. And this is where both, it's going to, both DeFi is going to be a lot more useful if it's being applied to these use cases, and also it's going to make the tokenization of assets a lot more attractive once you can do these things.
And on talking about the financial services sector, you work in traditional finance as well. What do you think is the biggest misconception the traditional financial services space has on developments like decentralized finance and DeFi?
So I have not been working in a traditional financial industry for a while, and since before DeFi was a thing. So I don't know. So I don't know what they might think. The thing is, like, there's a bias, of course, because if you're in traditional finance and you're really into DeFi, maybe you've already quit your job and you started working in DeFi. So, the people who are still there are going to be by almost by selection more skeptical. But I would say, a lot of traditional finance would look at this and say, hey, this is interesting, but a lot of it seems to be, like I said, circular and is essentially like a bubble, like a frothy bubble of people trading tokens with each other against other tokens, as opposed to being grounded in something concrete.
Interesting, Arthur. My last question, Arthur, before I move on to the fire round quick questions that we have today, is really when you look at some of the landscape right now in the market, right? So there's obviously other layer ones that are coming in. What do you think, if you look at 5 or 10 years down the line, do you think we'll have even more layer one solutions in the market? We'll have consolidation. How do you see the layer one ecosystem over the next 5 or 10 years?
I think it's going to consolidate a lot. There are lots of economies of scale in being in a single L1. That might seem contradictory because currently L1s don't really scale, and so one of the attraction of using alternative L1 is because the fees, on Ethereum, for example, are going to get very, very high. So people might use those as chains, and I think it's especially true for Ethereum clone, right? If you're on Ethereum and you say, oh, the fees are too high, I'll just go on Polygon. It's exactly the same, but the fees are lower. And Polygon is an L1, by the way. The Polygon being an L2 is pure marketing. So when people do that, I think that's because of lack of scalability. But if and when blockchain starts to scale, and I believe it will happen, that argument goes out of the window. All of a sudden, it's like, okay, so why would I be there? I think the nice thing with Tezos is that a lot of the people and a lot of products that are attracted to Tezos are not just attracted. It's not just an Ethereum clone with lower fees. It has its own DNA. It has its own particularities. It has its own interests. And so I think it can hold its appeal quite well, even in the face of lowering fees on Ethereum. So I think there's going to be a lot of consolidation among these different L1s as they start scaling. The other thing we're going to see is because transaction fees are going to become very, very cheap, people are going to rethink the way that they think about the value of these networks. I would say there's been a narrative that what makes the value of a token. It's not being a store of value. It's not being money. It's because holding the token lets you create blocks, especially in a proof of stake environment. and the blocks pay fees. But not only are fees going to go down, the total amount of fees being paid could even go down. Now that's a much stronger claim, right? Fees going down, it's like, okay, sure, if we have more scaling, people will need to pay as much as $100 to have fees. But if you have almost an infinite amount of available transaction, the cost of transaction could go so close to zero that even though you have way more transaction, they've become so cheap that you're spending less. So the price of transaction might fall even more than the amount of transaction rises. And if that's the case, then all of a sudden, the argument that, oh, this token is valuable because transaction fees flies out of the window, and you're left with, is it a store of value? Do people think of it as a store of value? Do people think of it as money? That's one argument that's been made, I would say specifically by Bitcoiners and maybe against Ethereum. I think what they're missing is that a lot of the existing L1 networks have tokens which are being treated as stores of value. It's like, yes, maybe the narrative that it's valuable because transaction fees is wrong, but it doesn't mean that they're not treated as store of values. And while you do have network effects in store of values, I think they're strong, but I don't think they're everything. So that's my prediction: consolidation and massive lowering of fees.
Very, very interesting. Consolidation one is one I would have expected. The massive lowering of fees is a very interesting angle from that perspective. But also, I think your view that a lot of layer one tokens as well will kind of fit in the definition of money by being a store of value, basically, is a very, very interesting one as well. And a very controversial one as well, indeed, as you mentioned, Arthur.
Yeah.
So let's go, Arthur. We're going to finish it up with a fire round of questions. My bell is with me, so I'm going to ask quick questions. I need 1 or 2 word answers. We're going to go through them very, very quickly, and the bell here will keep us honest. Are you ready?
Yes.
Arthur, let's kick it off. What is the biggest challenge you feel as a crypto entrepreneur right now?
So much to do. There's too many things to do, not enough people.
You studied applied mathematics at university. If your young nephew came to you today and said he's looking for a topic to study, would you recommend he studies mathematics?
Yes.
And why is that?
Mathematics is awesome, and you can do so many things.
So, if tomorrow you were not in crypto, what other industry would you want to be in?
AI.
AI, interesting. What do you do on your weekends when you're not working, Arthur?
I do hobbies, and my hobbies are working on AI.
Working on AI. Well, here we go.
Oh, and piano. I play the piano now.
Piano, interesting. Well, actually brings me to my next question. Who's your favorite musician of all times? Chopin. Here we go. You're originally from France. What is your favorite thing to do when you're back in France?
Eat crepes.
Crepe, here we go.
The crepe, the very thin pancakes, the buckwheat ones.
Here we go. Crepe connoisseur, Mr. Breitman. You're in London right now. What's your favorite thing to do in London?
Not go to the restaurant.
Arthur, you studied in university under Nassim Taleb, who is a very controversial figure in the crypto community. Do you think people have a right perception of him, wrong perception, or he's actually a nice guy if you know him?
I think he's quite nice, but he has no tolerance for fools, and perhaps even like not just fool. I think he's very, very hard on Twitter. I think he's a very nice guy.
Arthur, if there's one other crypto CEO today you could start a new business with, any other CEO in the crypto industry, who would you want to launch a new startup with?
CEO in the crypto industry?
Yep.
I don't know. Sam Bankman-Fried, you can't argue with success.
Yeah, here you go. We had shot him on the podcast last week. And Arthur Breitman, to finish off the podcast, if you could have lunch with one person, dead or alive, lunch or dinner with one person, dead or alive, who would that person be?
Oh my God, John von Neumann.
Why is that?
Probably the smartest person that ever lived.
Interesting. Here we go.
That we know of. Yeah.
Interesting. I think we could have a whole session on that as well. Arthur, thanks for being with us today. Where can people find you if they want to follow your work and follow some of the content you're putting out?
I'm on Twitter at ARTHURB, at Arthur B on Twitter. It's probably the easiest.
Excellent. All right, thank you very much for being with us, and thank you to all the listeners as well for another episode. If you like the show, make sure to subscribe and give us a 5-star rating. It really helps us when it comes to discoverability for more people to learn about crypto as well. If you want to stay on top of the latest developments on crypto and the future of money, make sure again to follow me on LinkedIn and Twitter, especially for my weekly Crypto Capsule show where I summarize the crypto developments you need to know in less than 60 seconds. And also make sure to subscribe to my newsletter. Now it comes out every Sunday, The Future of Money, where I share the 3 big ideas every week. Also, let's not forget, if you want to learn more about crypto and you want to learn more about the future of finance, I just released my latest course on Udemy called Introduction to Bitcoin and Crypto Assets, where I cover everything from Bitcoin, Ethereum, stablecoins, DeFi, other layer 1, CBDC, Web 3.0, the metaverse, and many of the important topics, all in 90 minutes. I know you guys are busy from that perspective. So, and also don't forget my YouTube channels where there's a lot of educational content and even videos of past interviews, including the one with Arthur, will be on. And of course, all my content now on YouTube is available not only in English, but also in French, Spanish, Arabic, and Mandarin Chinese as well, across my various YouTube channels. Thank you everybody for joining me. Thank you, Arthur, for being with us today on the Future of Money podcast, and see you everybody next time.